Welcome to LeonCo and welcome to your weekly video, and thank you for coming back. And this week we have something very special for you guys in store, and it is this diagram of how to invest in the stock market. How can you start investing in the stock market? We narrow it down to this simple diagram. It's foolproof. We will explain it step by step and everything you need to know to feel confident on how you can start investing in the stock market. So the first thing that we want to do before we get in full strength into the diagram is we want to explain all of the pictures or the symbols in the diagram. The first thing is the light bulb. The light bulb represents that idea, that interest that you have to invest in the stock market. Next up, we have the dollar signs. When we talk about the dollar signs, it means the money that you have, that budget that you have to start investing. Then, as you can see, the third image is the tree that we used in our first video for the month of December that represents the company, the leaves, the stocks. And finally, the apple from our last week's video. I'm sorry that this apple didn't turn out quite as good as last week. We are not artists, we just try our best here. But the apple represents that gain, that financial gain that you receive from the investment. So now that we have the basis of the image, let's jump right into the diagram. So first up, the light bulb. When it comes to investing, we've been talking about throughout the previous videos, and we've been talking about a lot on when you start to invest, when you think about investing, one of the main reasons or our best advice that we can give you is that always invest in companies that you feel comfortable with. Invest in companies that you know, that you're passionate about, that looking for information, learning about them, learning what makes them tick, how they sell, how they market, is something that you're interested in. It's not a chore, it's more of a hobby. It's something that you're passionate about. For example, if you're a person that's really into sneakers, a person that's really into shoes, for example, you collect Jordans, you collect Nikes, you collect Adidas, you collect Vans, you collect different kinds of shoes. Well, looking for companies that make shoes, for example, you can start investing in the Nike brand, you can start investing in Adidas. That could be something that could be your step on starting to invest, because learning from them is something that you like, it's part of your hobby, it's something that you do day to day, and learning how they work financially, how they work as a business will come not as a chore, but it will come something as you're learning more about a brand that you already like. So this is something very important when it comes to getting that idea, to getting that mindset when you want to start investing in the stock market. Secondly, the budgeting. The budgeting is very important because we don't want you to stop paying for your responsibilities. We don't want you to stop eating. We don't want you to stop paying your car to start investing in the stock market. This is not our reality. We want you to be financially stable. We want you to take care of your debts. We want you to be financially independent, and this is one of the tools that we want to share with you to be financially independent. We don't want you to stop paying for your responsibilities or paying for your needs, your day-to-day needs, to start investing in the stock market. So if you have debt, if you don't necessarily have money saved over each month or weekly that you can use to start investing in the stock market, we highly encourage you to focus on the task that you have in hand and try to work hard to try and build a better person, build a better financial situation so you can start investing in the stock market. But let's say that you are financially stable. Let's say that you have money that you can save over a week, that you have on the side each month, and you want to start investing in the stock market. So let's say that you make $300 weekly, and you can save $100 each week. So this represents the budget that you are going to start to do to start investing in the stock market. Well, from that $100, maybe you can start investing $25, maybe $50 just to get the feel of it, to see if it's something that works for you. Or maybe you can just jump right in and do the $100. When it comes to budgeting on the amount of money that you want to put in the stock market, it really depends on the amount of money that you have saved over, that you fill up all your responsibilities, and you feel comfortable. And that's the big part, that's the big word here, that you feel comfortable in investing in the stock market. So, after we talk idea, after we talk budget, let's jump right into the companies. Well, the companies come hand in hand with the ideas because, like we said, investing in the stock market, companies that you should invest in are those that you feel comfortable of learning from them. Going back to our example with the shoes, if you're very passionate of shoes, is something that you like and is something that you're already in that movement, you're already in that type of world, well, investing in companies that work with shoes is a good way to start. It's the way to go because it's something that you will, from the go, you'll feel comfortable. You feel that you're investing in something that you believe in, investing in something that you're passionate about. And that is something very big when it comes to investing, because you will have your highs, you will have your lows. But if you're investing in companies that you believe in and that you know that they are profitable, that they are selling, that they have specific markets or have different markets, that's the way to go, because you will be willing to stay through the thick and thin. An advice that we usually give when it comes to investing in certain companies is, if you don't have the experience in the stock market, if you don't have a person that will give you day-to-day advice when it comes to investing in the stock market, we don't recommend that you invest in companies that don't necessarily have a big track record in the stock market. Don't invest in companies that are risks. They have a high risk. Even though they will have a high reward, the inexperience that you will have in that moment may result in you losing money. And that is not what we want you to have. That is not what we are advising you. We want you to start investing in the stock market, and you will feel comfortable that you want to start saving, to start investing, to start making money. And that's the feeling that you should have when you start. You should not be concerned that you're going to lose your money very quickly because you're investing in companies that you don't necessarily know, or companies that are just starting up and they're very volatile. Another thing that we want to discuss when it comes to companies is you should be very careful, and you should be very thoughtful at the moment that you choose the company that is going to be the tool for investing in the stock market. And let's explain what we mean by this. When we talk about this is, if you're a person that has the time in the day from 9:30 a.m. to 4 p.m. to be constantly looking at the stock market, that has the time to see the companies, to research what is going on in the market, to be present throughout the thick and thins and the ticks and talks, and you're interested on what is going to happen, then we suggest that you start investing with companies that will give you the flexibility and that will give you the power for you to choose when you want to buy, where do you want to invest your money, and go through that route, go through those companies. But if you're starting from scratch and you don't necessarily have the time and you don't necessarily feel comfortable with that, there are companies that take your budget, your weekly, your monthly budget, and they invest it for you. You just tell them what companies you want to invest in, or how do you want to create that portfolio, and they will work with you with that, and you don't have to have that burden or that responsibility. So this is something very important when it comes both the investing in companies and choosing the company that you're going to use to invest. This is something very important that you should have in mind. And finally, the Apple. Well, when it comes to investing in the stock market, all of us want to make money, and that is the main reason why we invest in the stock market, from many other reasons, but the main reason is that all of us want to make money. Statistically, the reality is that return from investing in the stock market, the average is from 5 to 10%. That is the norm, that is the average. All of us would love to have a 25 to 50% return every year, and this is not necessarily something that's not realistic, but it's something that comes with very high risk, because to get that amount of return from investing, you'll be investing in companies that have a very high volatility, that have very high risk, and then by consequence, the return and the gain will be very high. But we wanted to make sure that we start this with that fact, because we don't want to mislead you when it comes to returning your returns from the stock market, because some people may say, oh, if you use this technique, you will get a 25 to 30% return, and maybe that's true. Maybe 1 in a million that happens, but that's necessarily not the norm. So you have to be very realistic and very present when it comes. I'm not saying that if you dedicate the time, the effort, and the money in the stock market, you will not make a lot of return in a year or maybe in months, but this takes, as I said, lots of effort, time, and money to get that return. So when it comes to having that gain, having that return, it really comes down if you work strategically with the first 3 parts of the cycle, having that return, it comes naturally, because you will be investing smartly since the start. You will be investing with a budget that works for you and in the companies and the way that works specifically for the needs that you have in that moment. So when it comes to having gains in the stock market, there are different ways, and as we explained in our last week's video about dividends, how you can have a constant flow of cash received throughout months. Another way that you can get gains in the stock market is when you buy stocks. Eventually, we all assume, and that it's the norm in the companies that we try to invest, is that the stock price will go up instead of going down. But if the price goes up, then you will have gains as well, the dividends, and by the price going up, you will have 2 ways and 2 methods on how to start having that gain in the stock market. So when it comes to having that return, you want to try to do a portfolio that has companies that you feel comfortable, companies that you trust, that you feel that you can invest in them with confidence. You should have mutual funds. You should have stocks that provide dividends monthly, so you can have that revenue of cash receiving that you can invest again in the stock market. And with some time, you can start investing in those companies that have high risk. You can start experimenting with companies that are starting with their IPOs, that have 2 or 3 years in the stock market, and that can eventually turn into companies that could be very profitable and that can make you a lot of money. So when it comes to gains, it's sort of a mix and match on how you can create your portfolio to have that maximum amount of gains. So after we talk about the gains, the beauty about this cycle is that after you get that return, after you get those gains, new ideas will pop up. And since you already have the budget and you're receiving gains constantly from the stocks that you have, you will create new budgets and you will start investing in other companies, creating more wealth, getting new ideas, perfecting the ideas that you have. And it's a continuous cycle that actually, if you do it smart, if you have a good basis from the start, it's foolproof. There's no way you're not making money. If you're doing it responsibly, if you're putting in the work, if you're putting in the time, the effort, and you're being thoughtful in the amount of money, the budget that you're creating, this diagram, this method of investing in the stock market is foolproof. So, this is the diagram. This is the best way that we wanted to share with you guys. We've worked on this a lot. We've tried it a lot. On our next week's video, we will explain how we took this diagram and we put it in practice so you can see how are we making experimental money throughout this diagram. So I hope you guys like this video. Leave us a comment below if you're unconsciously already doing this method, or are you thinking of starting a new method and this could help you with it. Give us a like, subscribe to our channel to receive more information, more videos like this. Hit that notification bell so you'll always be notified when we upload a new video. Check out our other social medias and always remember to have that king mentality.